Hi everybody, this is Gary Dean and this is our nightly video report for Thursday, March 3rd, 2016. So the bulls continue to buy the dips. We have the jobs number coming out tomorrow. My guess, if history is going to be our guide, either they're going to gap it above the resistance they're at right now. Typically when they do that, it fails and then it comes back down, just because of the extended move that we've seen so far without any breaks. Now, the second option is they, just sell off right from the, when the report is put out and continue lower. So I still, I'm just because of the divergence and the resistance that we're at, I'm on the side that we are still pending a drop. It's getting a little bit frustrating to watch this right now, but if we weren't in the patterns that we're in right now and the divergences that were in place with resistance, I probably would have bailed, but I'm kind of waiting this right now. Like I said, I'm pretty frustrated with it. I didn't really see this move continuing the way it is, and expecting that the pullback and then seeing them just buy. Well, one thing that I was mentioning yesterday in the trade room was typically the way that the bulls work is they'll start buying the 50-day on the 5-minute chart. So they'll continue to buy that. Then when that gives way, they move to the 15-minute chart, the 50-day. And then from there, when that gives way, they're going to go to the 60-minute. So right now, the past couple days, we've seen them buying the 5-minute. Today, it broke through that. It went back above, but it landed at the 50-day moving average on the 15-minute chart, which I'll go over all of that. But let's start off with our, we continue to see selling going on. I will repeat this every time I show it. This is not a, it doesn't mean that the market's going to go down right away. What it is, it's just showing you that, there's the money flow is negative even though we're seeing higher numbers in the S&P. So let's go to our regular charts here. This is the resistance zone right here. We're right in it. We have a fib retracement at 1999. We still have a ways to go. Now, a lot of people are comparing this right here, this move here, to what we're in right now. And I'm not saying that it can't happen like that, but there's still some differences in what took place here compared to what's going on here. And it's easier to show you in the other charts. But the one thing is we're at resistance right here. Then we have the moving average at 2023, and we also have this resistance line here. So there's not a whole lot of room here. And the thing is that once this B does complete, we're probably going to, which I do believe, that we're going to make the wave C that will take these lows out. So yes, I thought that we were going to make it into, the wave B was starting here. Obviously that was wrong. But we're still here, and the bigger picture is still looking for an extended move to the downside. But what I would really rather see is some kind of pullback again and then head up, just to give it a little more time for the stochastics to get into the overbought levels. So we are at resistance. We have a fib retracement at 1999 as well, and we have the we have the jobs numbers tomorrow, so it could be a catalyst. So here's that resistance area that I was talking about. Now, this is the bearish rising wedge that I'm saying, and we have these bearish divergences. So this, even though, yeah, it's painful right now to watch this, when these break, they usually break very hard. So what I would like to see is that us break this wedge, come down someplace into this 1953. Now, there's a chance that we could come all the way down to the 1909, and I'll show you that, but that's not really what I'm trading right now. I really would rather just see a move someplace down into the 1950, 1940 area, move the cash, and then if it continues down, then just jump back in. But if it comes down here, anticipate that we could get that move to come up and close this gap right here. Now, the problem for the bulls is there's a lot of gaps underneath this that have not been filled. So the bearish divergences, the bearish rising wedge, has me thinking that from where we are the larger move is going to be to the downside. Now, if they break right now and come down here, I still believe that they could head up somewhere up into the 2051, 2040 area, but I just don't believe they're going to be able to do that in one shot. So if we move to a 15-minute chart, again, we have these bearish divergences. We're hanging around the overbought levels. And this is just a bearish wolf wave, and people that have been around, I point these out all the time. The 6 is very, very reliable as far as a target, but the problem with this one is you just don't know exactly when it's going to come here. So the pattern, like the odds of the S&P coming down to the 1923 are very, very high. What is not known right now is, are they going to head higher first before coming down? But the pattern is really you have 1, 2, 3, 4, and 5. You take 1 and 4, and this is your target, which matches up with just a 38% retracement level. So that's really not that bad compared to, from where we are, from this low to this high. It's just a 38% retracement. So I'm not counting that out, that we could come here, because remember, we still have that moving average that's in this area as well. At the third, I'm sorry, I wanted to show you on this one, at the 1909. So we have the 1923, 1909, which is support. We have this bearish pattern in play, and again, I'm not believing that it's going to come down here, but I just want to point this out and leave the door open, because the bearish divergences, the extended move that they're just not giving any breaks, and here's that 15-minute touch on the 50-day moving average, just what I was talking about. So if we go to a 5-minute chart, this is, they were making little breaks of it, but you can see every time we broke above it, we found buyers, and actually today was, we stayed below it on it, and then it started moving up, and that was when it touched the 50-day moving average on the 15-minute chart. So once it breaks this, most likely the next move's coming down to the 1953. This is a support area as well. So again, if it comes down, even if my SDS trade is a little underwater, I'm probably still going to step out and wait and see how things play out, or just run with a very, very small position. But right now, the patterns are not something that you want to jump in all in on the bullish side. I think they're very dangerous. But yes, owning SDS on this move, it is frustrating, and I still think it's going to work out, but let's see what happens tomorrow. And with that, have a great night, and I'll talk to you guys in the morning.